Unmuted.
Hey guys, how's it going? I'm just gonna put on my mic over here. Oh damn, Jacob. Jacob is having some fun. Jacob's having some ice cream in the morning. Okay. Can you guys hear me? Like I just want to make sure that everything is up and up. Okay, perfect. No, Sami, I didn't. I haven't really logged on to my Facebook, so I guess they're just gonna get the recorded version. Or like, if you want, you can just paste this link anywhere you want. I don't really care. So I guess we're just gonna wait for like five to 10 more minutes, and then we're gonna start. I'm gonna stop recording. Okay, now it's being recorded. Perfect. So this is a welcome to my webinar. This is another one of those webinars like I've done in the past. Okay, so whenever you start trading, there are some things that you need to. Well, there's only like there's one thing you need to be aware of. I take trading as like business, right? Like trading is just like as if you're running a business, right? Like you have some money and you're investing that money somewhere and you're looking for returns, right? What do you do in a business, right? You make sure your profits are always larger than your losses. That's one thing, one really, really, really important thing that you need to know. Your profits should always be larger than your losses. How do we get to that? How do we make sure that that happens? That happens if you have a solid trading plan. Now, I'm not saying like by having a solid trading plan every day you're gonna win, win, win. Like some days you will lose, 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 because that's just the nature of the business. And if you do lose, that's I think that you're just paying back to be in the market. Like that's just how it is, right? Or you just need to step up your game. Okay, so yeah, let's go to chat. Let's go in the chat. What is the pip? Who wants free? Okay, trading plan. The number one important thing is to know what time you have to trade. This is really, 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 really important because like trading is one of those things which can literally consume your life. Like I'm not even joking, it can consume your life. Like if you're a new trader and you have no direction at all, your tendencies are going to be to trade all day, every day, because the market is moving all day, every day, and you would just want to have to like chase trades all day to like grab some pips or to get some profits and stuff. So that's why it's like really, really important to know what time you have to trade. Okay, so what now people may ask me like, okay, like what do you suggest? Like what times do you trade? Well, normally me, I'm someone who doesn't have patience, right? Like I have no patience at all. So I like the times when the market is moving really, really fast, like when there's a lot of volatility and liquidity in the market. Um, can you guys hear me? Like, is my audio fine? Is there some issues happening or no? I just want to make sure. Okay, perfect. All right. So the the times I like to trade is basically market opens. That's going to be in New York Open. That's what I trade. I trade New York Open, London Close, and Asia Open. I'm not going to go over like what times they happen or like how or like what time enter or close because it's all relative. Like you have to realize like now one thing is I'm going to say this first. One thing is that the market moves the same way at these times. That's just how it is, because the now you guys do know like what currency pairs are, right? Like let's say pair to trade. You go into pair to trade, and I like to trade USD right? I like to trade USD So let's say your trading plan has a pair that you like to trade as USD and you're only trading USD Now, if you start looking at USD on the charts at these times, at New York Open, London Close, and Asian Open, you will, over time, you're going to realize that this pair moves the exact same way at these 3 times. Yeah, I'm sorry, I'm having coffee. Yeah, so that's what you're going to notice, and that's exactly how I trade. And someone is not muted. Okay, one sec. Okay, so yeah, so like it's really important to know like what pair you have to trade. Now, the thing you have to do in trading is like what I consider currency pairs to be like us. Like they're like humans, like the way they act or the way they react at different market conditions. Just like you as a person, you're going to behave differently in the morning than what you're going to be like in the evening, or what you're going to be like before heading to bed, right? And every morning you're going to be in the same mood. Like it's basically just how it is. And currency pairs are just like that, right? At every time, every day, they act the same way depending on the market conditions, right? Now, I'm not saying that in the morning USD is only going to go up, or like it's only going to go down. It just depends what the trend is, or it depends what's happening in the market at that specific time. So these are the times I like to trade every day. And once you realize, okay, like what time is best for you, it could be even London Open and Asian Close too. Once you realize what that time is, then over time, like after watching the charts for so long, you will realize, okay, like this is the times where I can possibly catch a move. Okay, so important thing, time to trade. Second important thing, pair to trade, right? So just make sure you have one pair to trade. I trade gold as well. I'm starting to get into GBP JPY too, but like you have to realize I traded USD JPY for about 5 months. Majority of the time I was trading USD JPY for 5 months, and then I just started trading gold since December, right? And now I'm trying to get into GBP JPY. So it all, like, you have to graduate from pair to pair. Okay. Your daily goal could be in terms of pips, could be in terms of your equity growth, right? So like have a percentage goal. My percentage goal is around 10%. That's my personal percentage goal, 10%. It could be pips too, right? It could be anything, but have a daily goal. That is, my daily goal is 10%. If I hit that goal, perfect. If I don't hit that goal during my time to trade, then I don't trade. Then I'm like, okay, perfect. Okay, no problem, right? Because one thing is you don't need to overtrade. Daily goal, and then number of trades. This is really, really important. Number of trades. Always have a plan as to how many trades are you going to take in a day. Right? It could be like me. I stick to 4 trades a day, 3 or 4 trades a day. That's what I stick to. If I trade over that, then I'm over trading. Right? That's it. And the only reason you're going to lose money in the markets is because if you hold a loss, or if you overtrade. That's it. There's no other way. Absolutely no other way. No other way, right? Or if you break your plan. right? If you break your trading plan and if you hold a loss and you overtrade, you're going to lose money in the markets. Like there's no other way you can lose money. You can't leave money. Someone wants me to do a sound check. Sound check. 1 2 1 2. Sound check. Okay, working. Check your speakers, Kevin. Yeah, it's even working in Venezuela. Kevin needs to check his speakers. Okay. All right, trading plan. Perfect. Got this down. Okay, simple terminologies. I'm going to go over this pretty quick. Sound is HD. Perfect. So I'm just going to go over like some very basic stuff. Lot sizes. Lot sizes are what for simplicity what I call is like the volume you trade, right? That's what lot sizes are. Your lot sizes can range from 0.01 to 200 lots. Now, some of you new guys, you might have seen people trading like 200 lots or trading like 100 lots, like 50 lots, 69 lots, like, whatever. So those are the lot sizes that you're trading. Now, essentially what lot sizes mean, one sec. Okay, so what lot sizes mean is like, let's say you open a trade at a lot of 0.01 lot, right? So every point or every pip change in the market is equals to or approximately equals to 1 cent, right? I'm going to go over pip right now. So, right, so just keep this concept in mind that if you open a trade of like 0.01 lot, then every point change or pip change in the market is equals to 1 cent. Pip is 1 point, so let's say we have USD/JPY, right? Let's say we have USD/JPY, and USD/JPY is sitting at a price of 114.500, okay? And then what happens is like after some time, it goes up to 114.600, okay? It goes to 600. So what do you mean by this? This means that the market moved up by 10 pips, or you could say like 100 micro pips. Okay. So let's say the market moved up by 10 pips or 100 micro pips, right? So what's it going to be if you open a trade at a lot size of 0.01? That's going to be $1, because 0.01 multiplied by 100 is $1. Okay, because the market moved up by 100 pips. So every point change is equals to 1 cent. So if 100 points change, 1 cent is going to be $1. So in the same way, if you open a lot size of 100 lot, so every 100 point change is going to be $10,000. $10,000. It's pretty fucked up. Okay. All right. So, and then you have leverage. Leverage is, people ask me like, what leverage should they go with? Leverage is basically like, for simplicity, how I explained myself what leverage was. That let's say if you have $1 and your leverage is 1 to 500, that means that the broker is going to give you $500 to trade that money. Like basically, like you can leverage up to like $500 to trade the money. Okay, so spread, broker fee. Spread is the broker fee. It doesn't matter. Well, it does kind of matter what spread you have, but spread is the broker fee. Now, how this works is, I'm just going to see if this is being recorded. Oh, perfect. It's being recorded. Okay, so the broker fee is called spread. Now, spread is different on all currency pairs, right? On USDJPY, I know spread is USDJPY spread is around, on average I get about like 11, right? That's the spread. What this means is spread. So what this means is number 11 is 11 points or like pips, right? So these are like micro pips. This is just like micro pips. Throughout my presentation, throughout my whole thing, I'm gonna use micro pips, and I'm gonna call micro pips as like pips. So okay, so it's 11 points, like 11 pips, right? What this means is, now let's say if you open, still can't hear. Can everyone hear me? Just doing a sound check. Someone can't hear me. Sound check, sound check. Oh, someone affected me. 100 lots is 1,000? No, it's not. 100 lots. 100 lots on 100 pips is $1,000. No, it's not. It's 10,000 on 100 lot. If you open 100 lot, anyway, I'm not going to argue with that. I know I'm right. It's 10,000. So yeah. So let's say if the spread is like 11 points or like 11 pips. What this means is, like, if you open a sell, your sell is going to be opened 11 pips below your asking price. We're going to go over that later, like in the simulation I have, right? So let's say if you open up a buy, in the same way, your buy is going to be opened 11 pips below market price. Okay. Oh yeah, Jason, perfect. All right, perfect. So simple terminologies, okay. Now let's go to candles. Can everyone please mute themselves? Yeah, it's all intro. It's all intro. But we're gonna get to the simulation. Okay. So then we have candles, right? Candlesticks. This is how we trade. We trade watching candlesticks, right? When you see white candlesticks, or like I use white candlesticks, right? I use white candlesticks. So when you see white candlesticks, what does this candlestick mean? This means that price is opening low right over here, and then it's moving up. Okay, it's moving up and it's closing high right over here. Okay, so price opened low and closed high. This is what a bull candle is. Now in this whole in this whole time of this being made, right, price moved down as well, right? When price moved down, so now let's say price opened right over here. From this opening point, price moved down, came back up, it created a wick. This is what's called a wick. So what this means is that price ranged down. It tried to go down over here, and then it came back up. It passed its opening stage, moved up, and then it closed right over here at this point, right? This is a bull candle. Price opening low, closing high, creating a bullish movement, right? So these candles, they typically move up. Next, we have a bear candle. Okay, bear candles are the opposite. Bear candles, they open high and they close low. Okay, and they would close low. So what happened in this case is price opened high, right? It tried to move up from its opening point, and it was brought back down, and then it closed low, right? So price moved up, couldn't move up, and then it came back down, crossed this entry point, and then it closed right over here, right? So these candles moved down. So I have some questions. Okay, perfect. So yeah, so there was an issue about ECN, or DMA, I don't really like to get into that. It's all someone's own like preference, what they want to use or do, right? So wicks and ranges. Wicks and ranges. I couldn't I couldn't complete this. Okay, I couldn't complete wicks and ranges. So we're gonna hop onto the simulator. Okay, so I'm gonna explain wicks and ranges in the simulator. Okay, actually, no, wait. But we're gonna get to wicks and ranges. One moment here. One moment here. I'm just gonna load up an image. Uh, oh my God, this thing starts tripping. Okay, let's see here. Let's see what we got. What do we got? Okay, there we go. There we go. Okay, wicks and ranges. Wicks and ranges is like basically when market moves, market leaves behind clues, right? Like when you're looking at candlesticks, markets always leave behind clues. Now, let's say if you had this candle. Now the things I basically like to trade are these kind of candles over here. Now, this is I have a gold sell open. It's a 1 cent lot, so I'm not really worried. So the way how it works is now. Let's say if you had this candle and the candle it left a range, it left a wick, right? This wick could be like 110 pips, something like that, right? So it left a wick, and suppose that this is at resistance, and we're moving down, right? So let's say if the momentum is bearish, this wick range is going to be filled, always. Like market is going to fill this wick range. It's going to get filled. This happens on all time frames, daily, weekly, 4 hour, 1 hour. This is actually 4 hour. I'm just gonna close this door. It's fucking cold. Okay, so this is on the 4 hour, right? So these ranges are like filled if price is moving in that direction. Okay, so oh, fuck's sake. Okay, perfect. All right, guys. So now we're gonna go into the simulator. This is the fun part. We're gonna go into the simulator here. And how do you share? Share screen. Share screen. Okay. All right. So, someone throw up a date. 2016. March 1st. Okay, Jason, March 1st. March 1st, and then we're gonna
You're
go
a
to
killer,
yo.
by the way.
How can I hear you, Shama? I've muted everybody.
Nah, you can't mute
What?
me. Yeah.
Oh my God. Oh shit. Can't mute this guy. Yo, Shama. Mute. Everyone's muted now. Okay.
Yo,
How,
stop that.
Yo, he's still not. Shama, mute yourself. Still here. He's hijacked. Okay. March 1st. March 1st, and then we'll go to March 5th. All right. Okay. Let's wait for it to load.
What the fuck can I hear Shamba?
Yo, who's this?
Hey, Sammy boy.
Yo, you guys need to chill.
Okay, boss. Sorry, boss.
Okay. The fuck's...
Are you mad, boss?
No, I'm not mad at all. Okay. Let's see here.
Okay, so I keep doing this.
Oh, yeah. You bet. You bet. It's all Gucci. So let's see here. What am I doing? Up, charts, template, naked chart, and open some more charts. This is the 15-minute chart. So I'm going to open the 4-hour chart. And 4-hour chart, 1-hour chart. One hour and then 30 minutes. Oh shit, what's going on over here? Someone is messaging me and what? I don't have time for this. Okay. And then open your daily chart. So like I like to keep all time frames in front of me. Chart. And do you trade naked? No. Shut the fuck up. What kind of questions? Okay. So I'm just gonna open up the next one. Let's open up 15 minute monthly, daily, and okay, we're good.
Unless it's under the shower, yeah.
Yeah, exactly. Unless it's under the shower. Okay.
Yo, Sammy's still talking.
Okay, so
Jason, the webinar will be recorded.
yeah, the webinar is being recorded. And so let's do this. Okay, so we're gonna start with 15 minutes. And this is, okay, so I have, okay, so I have 10K. What lot size in this use? I'll probably use one lot size, stop loss, no TP, and okay. So daily. Okay, daily. Let's look at daily. Daily. Now, it's really important to do your top-down analysis, right? So where are we here on the chart? On the chart, I see from the get-go that we are at some support. Okay, we had some support over here on the 4-hour, and on the daily it seems like we are at some support as well. Right over here. This is what it is. Okay, so on the 4-hour we have the same things. So, and at the same time, we also see that there's some confluences right over here. So I guess this is going to be like a much bigger zone. It's going to be a much bigger zone. Zone could be like around to here. Because essentially what you're looking for is you're looking for the wicks, like you're looking for the support zones. Like some of you guys, if you guys are from Ted's webinar, you guys should probably know this, that you're probably looking for some wicking zone or some like. Now, from the get-go, I see that the price is moving down, right? It's trying to break support. It's trying to break support over here. You see this? So we're gonna take 3, 4 cells, and we're gonna hold them. I'm gonna hold them, okay? Because it's breaking support, so I'm gonna hold these cells. And let's go back to our time frames and what we were analyzing. So what I'm analyzing here is that I'm thinking, okay, now if price is trending down, right? Price is fucking moving down right now. If price is moving down, okay, there we go, and it's breaking support. It's breaking this support. If this support breaks, we are moving down to, I would say, this point here, to these wicks, right? And now you go back and you take a look at what this is. Now, you see, if this price comes down, it's gonna this is the point where it can bounce, because in the past you've seen a wick over here, you've seen some consolidation here, you've seen a wicking over here, and you've seen some wicking over here, right? So this is what my analysis is, that you have wicking here, you have it here, you have it here, and you have it here. And if this breaks, we're gone, right? So this is what my analysis is. Now on the higher time frame, let's look at the higher time frame. Let's look at 4-hour. There we're going down on the higher time frame, on the 4-hour time frame, right? So we have this lower high. This is probably going to be another lower low, right? It could be. I mean, that's what I'm hoping for, to be like a really, really lower low, right? So let's go back on the 15-minute and see what's going on. We're retracing. So we have margin, okay? We have margin, and so now how I trade very aggressive, right? So if you have margin, I would take like maybe 2 more cells here, right? If you have margin, right? So because price is retracing, and this is a time where market has just opened, so there can be some fluctuations. So it's going to be okay. I normally enter pretty early anyway, right? So let's look at 30-minute. And let's see what information we have. Okay, now see, like we're leaving a wick. So this means we tapped a zone over here. That means we tapped a zone, and now it's going up. Now, on the larger time frame, now this might not seem it's going to go down. It might seem that it's going to go up. This is on the 30-minute time frame, right? On the 15-minute, actually, let me open 5-minute as well. Man, I'm getting pretty pumped over here. We're going to make a lot of money. We're going to make a lot of money on this trade. This is going all the way down. Where's 5-minute? I don't have 5-minute. Whatever. Okay, so the spread is 25. That's a big spread on UJ. Whatever. Okay, the spread is 25. So we don't have 5 minutes. On the 15-minute time frame, let's look at this. On the 15-minute time frame, see, we're heading down. So if I draw the same support level, I think it was here, 274. Was it here? Let's leave it over here. Okay, whatever. Let's look at over here. Okay, it was a 268. It's a 268. So this is going to be, so now looking at the 4 hour, right? We're definitely breaking this area. Look at the larger time. The larger time frames are going to dictate what's happening. They will help you. Okay, so now this was around here, right? Somewhere here. Okay, let's do this. Let's do this wick over here. Let's do this wick because this is a support area that we have around here. This is a support area which is now being broken. Okay, this is going to be broken, and on the larger time frame analysis is that it's going to come down till here, at least till here, because this is a strong support zone that I can see. If you look over here, and there was a lot of consolidation here, so price did come down till here. So what are the chances that price is going to come down all the way down till here again, right? So this is what I say. Now, if you notice this candle here, it left a wick, right? It was coming down from resistance. It was coming down from resistance, and it left a wick down here, right? So the next candle, it filled this wick. Now, how big was this wick? Okay, this wick was 250 pips big, right? So this is the 4 hour time frame. So I now always look at the larger time frame analysis to see how far we're going, or like how big our range is. So I see wicks at ranges. So from the get-go, I see that, okay, like my range is around 250 pips. So I can probably get 100 pips from this 250 pip range. Makes sense? So now let's say how big our range is over here. Our range is a good 330 pips. It's a good 330 pips, right? So from this you can, let's aim for like 200 pips. Okay, that's like a good aim. Look at that fall. Look at that. Look at Felicia go. Yeah, in my groups we call UJ Felicia. So yeah, just look at her go. Okay, so we're just gonna let this ride. Actually, speed it up a bit. Let's speed it up a bit. Let's get this. Oh, damn! It fell so hard. Okay, perfect. So we got actually more pips than we aimed for. So we close the trade over there. Damn, that was a good fall. So I closed the trade because the target was met, right? So now we're just gonna let's reanalyze. Let's see what's really going on. So it seems like price might jump off from this area or something. I'm not really sure, but like let's see what happens. Okay, let's see how this 15-minute candle closes. Let's see how this 15-minute candle closes. I think it's going to continue going down. Yeah, so since I already did that trade, now one thing is, as a new trader, you don't want to jump into trades back to back. This is really, really important. You don't want to jump into trades back to back. Now, since you got that trade, I wouldn't advise anyone, any new trader, to jump into a trade right after that, because that just ruins the habit of like that just makes you have like bad discipline. Like you can't have really good discipline if you are like jumping into trades like one after the other, because you met your target. Like what was our target here? Like we did 20% in this one trade, right? Just because we were looking at the higher time frame, but on the smaller time frame it might seem like a big drop, but on the high time frame it's nothing, right? Like look, it's absolutely nothing. So speaking of nothing, on the daily time frame, I can see that we are reaching a resistance. We're reaching a support, right? So let's go on to our 15-minute time frame, and I'm going to talk about a wick here. Now you see this wick? This wick was created. The next candle, it completed that wick. Like it filled that wick and it went further. So if you wanted to scalp this, I could have easily scalped like 50 pips. Right? So that wick always, like it just got filled. Right? So now let's go. What I like to do now is I trade 4-hour candles. Like I wait for the next 4-hour candle. So let's go ahead and we're going to wait for the next 4-hour candle. So we're going to speed up the process here. Or actually, I'm just going to try to take some wiki trades here. Let's go on to 1 hour. Okay, so this candle is finishing. I'm just going to take a trade over here. Once this 1 hour candle finishes, after this 15-minute candle. So let's see here. Now, one important thing to realize is, now essentially when you're looking at the market, you're basically visualizing how candles are being made, right? You're basically visualizing how they are formed, how wicks are made, and all that good stuff. So if you're seeing this 15-minute candles, this 15-minute time frame, let me show you this. Okay, so this 15-minute time frame, we're moving up, right? So this is just retracement. Market is just retracing because it had a fall, so market is just retracing, and now we're moving up. But if you look at the 1 hour time frame, you can see that we're creating a wick. Okay, we're creating a wick. So you got to visualize. Now, what I'm visualizing here is that since we're moving up, we're probably gonna fill this 1 hour wick on the next 1 hour because we're in a downtrend. Let's look at 30 minutes. Look, we're moving up. So here I'm going to take some cells. I'm going to take some cells over here, and we're going to aim to fill this wick. Even if we can't fill this wick, we're going to aim for like some nice 100 pips. Let's aim for here. I'm going to aim for here. 112. Let's do 112.260. Okay. 112.260. See if I can move this. I can't move this. Okay. Whatever. So I'm going to create, let's put a TP zone, 112.260. Right over there. So this is a TP. And I'm saying that we're going to fill this 1 hour wick is going to be filled. So let's see. Maybe we're going to get some more pips. So let's see over here. Right? This isn't now. It's a very aggressive early entry, right? Because price can retrace all the way up, but I'm just like banking on like, okay, if it retraces up, I'm gonna hold my position. Is no big deal. Okay, so there it go, there it go, there it go. This is a pip count. We're at it. So this is standard pips, right? You have standard pips over here. So just visualizing candles. Where would you put the mental stop loss? My mental stop loss is going to be when I go into like negative 3 grand or like 2,500. That's going to be a mental stop loss. Somewhere around that, because you got to realize like what's the probability, right? Like you're playing probabilities. Now, what's the probability that on the 15th? Now, okay, let's look at 4 hour. Fuck this, 4 hour. What's the probability that price is gonna all of a sudden go all the way up? What's the probability of that happening? Very low, right? Very, very low. What's the probability of the price to continue to go down? So then now you're using your confluences, right? So we're in a downtrend. Okay, we're trending down. 1 hour is trending down. Now see, it trended down, retraced down, it retraced, and now down. It's trending down. So I'm using a strategy that these wicks are filled, and I've used this successfully in the past, so I'm just going to stick by to it. I think it will get filled because that has been true 80% of the time. So it's going to go down. This is my analysis. Really important to trust your analysis. Yeah, Rick, Wicks don't lie. Hope this fucker would move fast. Okay, let's go, UJ, let's go, UJ. So we are at 6 standard pips, like 60 micro pips. And just notice how this candle is going to complete. Wow, it's the fastest it goes, eh? Do we need daily time frame? We don't need daily time frame. If price bounces from here, it's going to go all the way here. It's going to go up. If price bounces from here, it's going to go up. Yeah, if price bounces from here, it's going to go. Let's see here. Daily, weekly, monthly. Let's look at monthly charts. Not that it's like, I don't know, like monthly is coming down. So monthly is going to fill that way. Monthly is going to fill that way. We'll see. Okay, so, yeah, let's go. On the daily, when it filled the wick range. On the daily, okay, so we got more pips. We got 150 pips, 15 standard pips. Let's look at what's going on the 1 hour. Oh, this is still that 1 hour. This 1 hour hasn't completed yet. Wonderful. Close positions. Okay, let's wait for this 1 hour to complete. So the next 4 hour starts at 4. So it's going to be Jesus right over here. Oh man, we gotta fasten these things up. Close monthly. Okay, so I think yes. So now notice how when this new 1 hour was formed, it moved up. When this moved up on 15 minutes, it seemed like it's going up, right? But it's creating a top wick. This top wick is what I call liquidity wick. Okay, and this wick range is going to be filled. This is what I see. Like it created a liquidity wick. It moved up to gather liquidity, and now it's going to go all the way down and fill this 1 hour wick. Now, if you would have caught this 1 hour wick is again 100 pips big, right? So no sweat. It's going to go all the way down, and it's going to fill that wick. Same, came close enough. Okay, so let's look at 4 hour looks like it's trying to go down. So not taking any trades right now. Just gonna wait for the next 4 hour, new 1 hour formed, new 1 hour fill this wick. It's trending up. Move, move, move. Okay, so now, since we're moving down, let's just wait. Let's just wait for the next 4 hours. What time is this? 3. We're going to continue moving down. Okay, so I guess, so once we're moving down, we did fill this wick over here. This is a wick range. All this needs to be filled once price and momentum. Let's wait for the next 4 hour and it starts. Is this a new 4 hour? No, 2 more 4 hour candles. 2 more 15-minute candles. Now, price is at support at this point. Price is at support over here. This is some sort of support because it tried to go down and it couldn't go down. Like maybe it's creating a liquidity wick to move down in the 4 hour. Right? Because, okay, in the past, price came down, moved up, came down, consolidated, broke down, came here, consolidated. So this is an area where this area here, this area here, this area here. So price came down in this area once, twice, 2, 3, and 4th time it's here, right? So in these 1, 2, 3, 4 times, it broke down once, right? In these, right? It broke down once, and it wasn't able to break down twice. So what's the probability it's going to break down again? It's pretty low. Let's go back in the past. Let's go back to the left and let's see here. It was here, it broke down once, and then it consolidated here. Consolidation. I think this could be a consolidation here, the next 4 hour. The next 4 hour could be some sort of consolidation. So it could possibly go down and fill this wick as well, but let's see what the smaller time frames dictate or where they move. Let's see if they create higher highs and higher lows. Okay, so this 4 hour candle, it started at 9 p.m. Eastern. Like for all the guys who trade Eastern time, this is 9 p.m. Eastern time. It's moving too slow. What's daily saying? Moving up, 1 hour is trying to move up. Now, let's pause over here. Let's pause this for a sec. Now we failed to break this zone. Okay? We failed to break this zone. Now the next analysis is that we're ranging. Okay, now we're ranging. So I think we're going to range all the way up here. How big is this range? This is 200 pips, right? So I think we can get like 100 pips from this range. We're going to range all the way back there. Like we're going to retrace. Even look at 1 hour. We have this range. We have this range. On the 1 hour, you can go till this wick range, right? But I think we have this range over here in Asian session. So I think the reason it fell was, now fundamentally, here's what I think. Fundamentally, I think that during the Asian session, USD/JPY moves up 70% of the time because the Japanese, they like to keep the yen weak. So when yen is weak, USD/JPY tends to goes up. Now, the reason why it fell is because I think momentum was bearish. So I think in this bearish momentum, some ranges here, these wicks or this entire range had to be filled, right? So I guess we could be seeing a bullish momentum here. So we're just going to see, I'm just going to take some buys. Let's take some like 1.69. Let's take some buys here. 4. Let's take 4. And then we're going to take some on retracement. 30-minute. Okay, yeah, perfect. We are definitely going up. 30 minutes says so because the reason why, because 30 minute we have a higher low, another higher low, right? And we have this range. How big is this range? 100 pips. So we're going to catch 100 pips, right? And then we're going to let 3 positions run. Okay. Let's see. On retracement, I'm going to take more buys, but that's my analysis. I'm going to add more positions. Oh, it's gone without me. G-U-J, go U-J. Alright, okay. So I'm going to enter more positions. 30 minute. 30 minute is good. It might retrace a bit, but I think we're okay. 1 hour, okay. So now here's the thing. If you're looking at 15 minute, right? You're looking at 15 minute and you're probably saying that, oh, like, you know, like we're moving down, right, on the 15 minute because the body of the candles is getting smaller. So you're probably thinking, oh, we're going down. But this is, the market is giving you a chance to get discount prices, right? So you can buy it at discount. Because on the 30 minute, it seems like still, oh, like we might break down and make like a bearish engulfing. But if you look at the 1 hour time frame, when you look at the 1 hour time frame here, I see that the 1 hour candle is just going to make a lower wick. So this lower wick is going to be a liquidity wick for a move up. So now we're just going to trade off of the 1 hour, right? So this is when we say, okay, now we're going to hold the position. What's the drawdown? The drawdown is nothing. Okay, so what does this mean? We get discount prices. All right, so let it run. I want 100 pips. And this 15 minutes is going to end soon. I'm just going to see where my 100 pips are. Here. 112,470. 112,470. 100 pips are here. Okay, so now notice how this wick is being filled. This wick here. It's going to get filled. Right? This wick is going to get filled. Now price is just retracing. It moved up. It's retracing to move up again. Right? Because price moves in waves. On the 15 minute, you can see these waves. Moved up, moved up, moved up, moved up. So you can see these waves. We have 40 pips. Right? So again, we're going to look at 30-minute time frame. See it moving up. Beautiful, beautiful move up. And on the 1 hour, moving up, filling this wick range. Again, we're aiming for like 470, right? So that's our tick profit. 4 hour moving up. On 4 hour, I'm a wizard. Oh, thanks, man. No, man, it's like basically it's just how the market is moving. 460, 470, 90. Okay, perfect. So this is another thing that I've noticed is I've actually noticed this a lot, and I just noticed it. I just noticed it here. Higher highs, no, actually higher lows. You see this? Price is making higher. Hope this is being recorded. Oh, it's being recorded. Perfect. It's being recorded. Right, so price is making higher lows. So what this means is that, okay, we're making higher lows, price is tapping this zone. So when price is moving upwards, and you have confluences that, okay, it's the Asian session as well. So this will mean that price will break out. It will break out. And That you can see on the 1 hour. So we're probably going to fill that range. Actually, no, I'm not. I'm just going to take out some positions. Take out some of my positions, and that's it. And I'm going to put these at break even. Okay, this is a break even. So on the 1 hour now, these are like wicks, right? These ranges have to be filled. Now, see, it's going up now. So we're just going to wait. Okay, let's pause this here for a second. Let's reevaluate and see what's going on over here, because this is just retracing and retracing and retracing. So now we've broken out of this resistance area. Okay, so what I think is we're probably moving up now. Like, we're not coming down, because now look at this 4 hour candle. We're going to move up. There's no way that we're going to move down, because this is a big candle. Now let's look at 30 minute. And 30 minute, yeah, we broke out of this resistance area and we're gone. We're off to the races from here. So here's what I'm going to do. I'm just going to speed it up, and yeah, I'm just going to speed it up. So now see how it's moving down? This is creating a, 1 hour? It's creating a 1 hour liquidity wick to go up. Actually, I'm not going to trade. Like, this would be me over trading. So we're just going to jump over to the next 4 hour. We're going to jump over to the next 4 hour. The next 4 hour starts at 8. So this will be 1 a.m. Eastern candle. See how this fucker made liquidity wick? Oh, it's about to start. Okay, we have time. Oh, these positions are still running. Look at this, 250, 60 pips. All right, and let's go. 15-minute is moving down. It's moving down to this support. Let's look at 1 hour. 1 hour is moving down. 30-minute is moving down. 4 hour is creating like a nice wick. Yeah, so resistance became support. This was resistance, so now it became support. So it's moving down, and then I'm just going to wait for this candle to close, and I'm going to see where 4 hour closes. Okay, perfect. So here we are. We have 4 hour candle close. So now, this is where we are. The new 4 hour candle is going to start now. Okay? The new 4 hour candle is going to start now. Now, what could be your range here? I think my range could be like this wick range. I'm just going to trade this wick range. This is like 100 pips. And on the 4 hour, I'm willing to go under any. Let's look at daily is going down. I don't care, because 30-minute time frame. Okay, let's look at 15-minute time frame, and yeah, basically reevaluate the chart on the higher time frame 4 hour. We're moving up, so we have this trend line here. So I'm just gonna take some buys here again, because essentially what my aim is to fill this wick range. Actually, let's aim till here. Okay, let's aim till here, this wick. So now notice how this range, there's a wick over here, there's a wick over here, there's a wick over here, these consolidation, and this can also be counted as a wick, because price is just a range, right? So between these prices, we're aiming for the price to go up till here. Okay? This is for scalpers. This is like a scalping dream for me right now. This is my scalping dream. So what I'm going to do is I'm going to take some buys. I'm going to take some buys. 4, 5. Take 5 buys. And now we're just going to wait for this. Should take more buys. Bear buys. Take bear buys. So our range is, let's see what this price is over here. Our range is 737. So 700. Okay, let's make it like 112 700, which is a lot of pips. Okay, so 112 700. Still here. So that's like around 160 pips on the 4-hour time frame. Okay, based on the 4-hour time frame. All right. Take profit. How do you set take profit? 112.700. Uh-oh. Okay. Let me just put take profit on these. Open take profit. Oh, nice. It just adds it. Perfect. Perfect, perfect, perfect. So now price is retracing. Take more buys. Oh, I guess I have too many positions. How do you see your all you have to be doing this faster in real time? No, in real time I'm doing it at the same speed actually. 1 hour we're moving down. No, I don't trade 1 minute. I don't trade 1 minute. So in the 4-hour we're probably going to make a liquidity with. Oh, is this a 4-hour? Is this the new 4-hour? Is this the new 4-hour? Oh shit, this is not the new 4-hour. It's still the same 4-hour running. Fuck am I? Wow. Okay. Well, where can price go, like what kind of damage can be done? Do you add stop loss? What was the question? Do you add your stop loss first before you TP, like after you enter? No, I don't. I don't know, this take profit, I just entered take profit just for the hell of it. Yeah, basically, just for the hell of it. Sometimes I put take profit, right, if I'm going to be away from my computer, but I don't really. And notice how this trend line is being respected here. So the next 15-minute candle is going to start. And let's pause here and look at this. This candle pattern, okay? Here we are at support, okay? We're at support and we have this wick range. So price bounced from, okay, so first it was resistance here, and then price bounced from support, came down, and it went up, left this wick range, and then this candle, it filled this wick range on the 15-minute. I don't trade 15-minute wick ranges anymore because I've adapted and I've moved to bigger wick ranges because I've noticed that on bigger wick ranges you can hold your trades for longer. You can hold the drawdown and then your gain is much more. My laptop battery is dying. My laptop battery is dying, so we're going to charge it. All right, perfect. Okay, so yeah, just like a quick info. So we're going to continue with this trade. That's a good point. Trade the 1 hour 1 hour 4 hour wick ranges, they're always reliable, and we're going to get 100 pips from here. speed it up a bit. Speed that up. Okay, there we go. Now this is the new 4-hour candle start. Okay, the new 4-hour candle is started, and this wick range is going to be filled now because we're probably moving up. Yeah, we're probably moving up. Look on the 1 hour, I think we're probably moving up and filling some wick ranges. And we have this trend line as well. And once this trend line breaks, we are going up to the sky. 30 minute, 100% we're moving up, because 30 minute we went up and then we consolidated here and we're moving up, right? So we can still let some of our positions run. Actually, you know what, I'm just gonna put like take profit, remove take profit from these big ones, and we're gonna hit take profit, no problem, and boom. Boom. Okay, so here, same thing. You had this wick range on the 15 minute, and price created a liquidity wick, went up, completed this wick range, and you can see like there are more like wick ranges, and we're probably approaching a consolidation zone here. Wick ranges, and it filled because price was moving up, right? It was in momentum. Over here as well, let's look at 1 hour as well. See, we have this wick ranges. We had like, I'm going to put this line here so it's more clear. Yeah, exactly. Broke the upward trend line as well. Let's put this line here. So as David says, fuck EMAs. Okay, so here, right? So price was just making like higher highs, actually higher lows, and basically you're just mapping out your wicks. You're just mapping out your wick ranges. And another thing is, if you notice that here price moved up, it came down, right? Came down and it made a loop and went up again. Went up again and it filled this wick range. Does this make sense? The price moved up, it retraced, made a loop, and it filled this wick range. Wave. No, I call this a loop. Okay, there's a question. So which time frame do you enter? Okay, someone asked me, what time frame is this? What do you mean? What do you mean which time frame I enter? Okay, so like, and in the same way it happened here. I'm just gonna close this trade list here. Right, move here, remove this, and the same way it moved here. Like price moved up, it created this wick, came right back down. You had a confluence of the trend line, came to the trend line, created a candle that okay, we're moving up, and it went up and it filled this wick range over here. So it made another loop. Right? It made a loop. Came up, made a loop, and it went up. Right? On the 15 minute, it seems like it's making a loop, but on the 1 hour, it's just filling the wick ranges. Even on the 30 minute, it's just filling wick ranges. Right? So it's really important to look at all your time frames, and I think UJ is moving up from there. So this is it. This is all I trade, basically. Like there's no rocket science to this. Like you're just looking at your major time frame, and you're looking at like wicks to be filled, and you're mapping out zones, and like you're just like using other time frames as well for like wicks to be filled. This is all I do all day. This is all I do. Okay. So yeah, if someone has any questions, I'm open for questions. like if you guys have questions, you guys can just like re-watch this again. It's going to answer all your questions, basically. Yeah, like you can use anything for like wick ranges. Anything. I just use the 4 hour because let's say if 15 minute is if 15 minute is confusing you, that there are a lot of like candles. If it's confusing you, go to a larger time frame, right, and see if this makes sense. You know, if this is confusing you, no worries, go on to a larger time frame, right? So on the larger time frame, you will see more clear candles, right? The candles will be much more clear. And then if you go into 30-minute, 4 hour, the candles are even more clear here, right? So always look at the higher time frame. Okay, so rewatch it. Yeah, just like rewatch this, and it's gonna clear any questions you would have. This is why it was. Okay, perfect. Awesome, guys. Have a nice Saturday. This Sunday, it's going to be lit. UJ is going up and then dropping. All right, awesome. Thanks, guys.